right, everybody. I'm gonna start the video, and then other people is gonna get on. So I'm only gonna stop for just to make sure they get on. But tonight, guys, I've pretty much over the weekend I thought about all this trading we've been doing and how we always talk about the trading platform on TradingView, but we never really go into the contracts themselves as far as what we actually trade in and what the future markets is. So I want to just give a good little description of that tonight by going over and understanding the S&P 500 futures contract. Okay, so let's start this session. So who create the contracts, guys? The CME Group. The CME Group right here. It's the Chicago Mercantile Exchange. So with that being said, the CME Group is the world's leading derivatives marketplace made up of four exchanges: CME, CBOT, the New York MEX, and the COMEX. Each exchange offer a wide range of global benchmarks across all major asset classes. It's a CME, it's pretty much as designated is contract market that offer products subject to CME rules and regulation. This was also established in 1848, just to let y'all know how long CME actually been around and how old future contracts are, as the world's first futures exchange based in Chicago, my hometown. So pretty much, guys, this is, in other words, I'm going to be honest with everybody, because sometimes this might sound complicated, but in other words, pretty much this is just a copycat of what Wall Street is. That's all this is. This is also the low end version of trading, where you can go in from a more of a cheaper route to be exposed to trading versus going directly through Wall Street, where everything is priced already at a high price. CME has created future contracts where it's priced at a lower price for everybody to get in, but to be able to trade the same assets that you would normally trade on Wall Street. So that's pretty much what it is. When they say derivatives, that's pretty much, I'm sorry, they pretty much saying, like Wall Street. Wall Street is going for like $30-some thousand right now in order to trade one stock, but futures has taken that down to 1/10 of its size. So I can now be a part of Wall Street with $50 now and just 50 cents. I'll get paid 50 cents, but buying a contract that costs just $50, I can now be a part of that $30-some thousand that Wall Street is doing, or whatever it does throughout the day to even continue to remain in the 30,000s range or even go up to the 40,000s range. I now could be a part of that wave, all because CME Group has created future contracts for us. So the difference between CME, they create micro mini contracts. Micro mini contracts are the contracts we use, the ones that cost really, really cheap. Those are the micro minis. CBOT is the regular, the $5, $10 type of contracts. And then the New York MEX and the COMEX, these are the ones that's responsible for making commodities contracts. So for those that's into gold, silver, and those that's into crude oil or any type of oil, or also what else they have on there, because it's just strictly commodities. I'm trying to think of what else they have. It pretty much, just gold, silver, oil, and I believe that's pretty much it. So if you ever wanting to get into that, you'll get into that through these markets, all right? But they all under the umbrella of CME Group, all right? Just letting you know that. So when you ever get a chance, just go on CMEgroup.com, guys. It's just really a nice place to go where you get caught up on the latest and greatest, just as far as like new contracts that's going to come out. They're the ones that they already have just came out recently with the Bitcoin contracts now. So now we can actually trade Bitcoin as a futures contract. And I believe it's like 100 or 200 some dollars you have to have just to trade Bitcoin. So that's really good. Definitely when that time comes and you think you're ready for Bitcoin, then definitely you have the opportunity now. All right. Next step here is that what are ES and the micro E mini, the MES, that's what we're trading currently, the MES. This is pretty much the E-mini, the micro version of the S&P 500. It say the future contracts works just like a regular futures contract. It is a legally binding agreement between a buyer and a seller that allows traders to buy or sell a contract on a financial index and settle it at a future date. And in that future contract speculates on where price move for indexes like the S&P 500. It say right here, guys, it say ES contracts are priced at $400. This is just one contract, which is a regular ES contract, which is the E-mini contract. All right, which is ES is the symbol for the S&P 500, just the regular S&P 500. That's the symbol for it. So it's worth $400, which is worth $12.50 per pip or point or tick. So this is the one we trade. We trade the derivative of this. So this is what we trade. MES contracts are priced at $40, which is $1.25 per point. So if you really think about it, so realistically, if I buy how many of these, so I would have to buy about, let's do the math. So it'd be this equivalent of let me show everybody how it works. This will be the equivalent of how many contracts will equal to 4, so that way we know exactly how many contracts are already featured in the 400. So 40, we doing it. That's 10 contracts. So this one already have 10 contracts built into it, which is already priced at $12.50. And then here I will have to buy 40 of the micro minis. I will have to buy 10 going for $40. That would then be 125 times 10, which would equals the same price as $12.50. So that's the derivatives of this. So they both the same thing. One is just priced already at that price, and then right here I just need to put up $40. So say if I don't want to buy something right now, $400, I don't have that type of capital, and I don't want to right now, make this type of money, because if I make this type of money, I can also lose this type of money. I might not be ready to lose $12.50 yet, but I'm willing to lose, $1.25 if I only want to buy one contract. So that's the difference. That's why it's dirt cheap for all of us to be a part of something, instead of us sitting at home saying, you know what, I want to trade, but I just don't have enough capital to trade. You can now afford it. I got a little video right here. Let me just copy it for you guys. That somebody just chimed in. So I want to copy that video so I can show you guys exactly how this works. 1 second. All right. Welcome. So let me copy this video. I want y'all to see exactly how this works, all right? Let's do this for you guys. I want y'all to see the video.
Big things do come in small packages. CME Group is launching Micro E-mini futures contracts, a new, smaller-sized suite of futures contracts for 4 major indices: S&P 500, NASDAQ 100, Russell 2000, and the Dow Jones Industrial Average. These contracts allow market participants an efficient and cost-effective way to gain exposure to 4 key indices. All 4 of the Micro E-mini futures are 1/10 the size of their respective E-mini futures counterparts, allowing all traders futures exposure without the notional constraints of the larger contracts. For example, while a single E-mini S&P 500 futures contract has a value of $50 times the agreed upon E-mini futures price, the Micro E-mini S&P 500 futures contract has a value of $5 times the agreed upon price. The Micro E-mini contract multiplier varies by product. While both the Micro E-mini S&P 500 and Micro E-mini Russell 2000 have multipliers of $5, the Micro E-mini NASDAQ 100 has a $2 multiplier, and the Micro E-mini Dow Jones Industrial Average has a 50-cent multiplier. So let's look at a specific example. If the S&P 500 index is trading at 2750, the notional value of one micro E-mini S&P 500 futures contract is $13,750. Similar to the E-mini, the tick increments of the micro E-mini S&P 500 are quoted in a quarter of 1 point. A one-tick move in the micro E-mini S&P 500 equates to $1.25. A 1 point move, which is 4 ticks, is worth $5. This equates to a smaller, more affordable way to access one of the most liquid equity futures in the world. The tick increment of the other 3 micro E-mini contracts vary according to the contract multiplier. The micro E-mini futures contracts trade Sunday through Friday, almost 24 hours per day. Micro E-mini futures expire on a quarterly basis, settling in cash to the spot value of their respective index on the third Fridays of March, June, September, and December. The micro E-mini futures contracts operationally function and provide the same benefits as their E-mini counterparts, except for their smaller contract multiplier. These benefits include portfolio diversification, capital efficiency, which is provided by margin offsets with other benchmark CME equity index products, and precision and flexibility in tailoring exposure and managing risk. Discover how a smaller micro E-mini futures contract opens the world to greater trading possibilities. For additional information, including contract specifications, please visit cmegroup.com/micro E-mini.
All right, everybody. That was just like a quick, video to just go over the contracts and the value per, per contract. When you're paying for when you're buying a contract for $40, you can get it for $125. I did see the part in the video where they say the contracts actually expires, guys, at the end of every third month, on the third Friday, guys, of every month. So I want all of us to be mindful of that. So we know that we're already in February. We know the next month is March. So March will be considered a third month. So we know automatically, everybody should know now that on the third month, the third Friday of every third month, these contracts expire. Once they expire, guys, we have to just get rid of and move on to the next contracts. And so we'll continue to go over that over and over. But this is pretty much what you guys are getting yourselves into when you buy these contracts. CME Group is responsible for the contract that the brokers offer. Let's move to the next slide. Sorry, I'm going backwards. Okay, economic news, guys. We talked about this before, but we got to be mindful also, just like we talk about Wall Street. It's the same thing that impacts Wall Street impacts the S&P 500 also. So pretty much when it comes to the S&P 500, here are some economic events that will move it. We have the ISM, Manufacturing Purchase Managers Index, which is called the PMI for short. Manufacturing Purchase Managers Index, which is the MPI for short. And this pretty much, in other words, guys, these are the managers of these big companies that pretty much we all in America, we shop at. It could be the Targets, the Walmarts, Walgreens, all these places, Home Depots. These managers actually have to go nationwide or report based on what inventory they need. If they are low on inventory, they have to then go in there and request the store to be restocked again. And the actual report is actually reported on all these stores. All right, so a real report come out, and this actually right here, the Manufacturing Purchasing Managers Index, that's those managers purchasing all the items so the store can be restocked. What happens is once they purchase all these items that they need for the store to continue to keep running, then that it'll come out and let the pretty much, let those in government, let those like bankers and stuff like that, and us as traders, it'll let us know what percentage was that, so we can trade. And if the percentage is high, showing it'll show great demand that Americans are buying. You see what I'm saying? That's how this works. So a report would come out for that. And this is what everybody used to analyze, like, the Federal Reserve. This is the reports that they use to help analyze where America is when it comes to inflation, where we are when it comes to, jobs. Are people working so they can have money to go and buy things from these stores? That's how it all works. If a person's not working as much, then the Federal Reserve know that the report is going to come out showing that people are jobless and they're filing for unemployed. So most likely they're not buying and shopping like they should, right? This is how our economy works. If we don't understand this, your economy don't work off of racism. It works off a real global, like a real corporate level. It's not just racism, it's really ran like corporate. Everything that you do, somebody's making an investment off you. So whether you wake up, whether you get out of bed, or whether you stay in bed, somebody's actually making an investment off you at all times, 24 hours a day, 7 days a week. Whether you go to work or you don't go to work, somebody's making they're making a bet on whether you are or whether you are, whether you are or whether you isn't. So whether you're going on vacation, whether you're not going on vacation, somebody's investing in that, guys, and they're living very, very wealthy, and they've been doing it for a long time. So I just want you guys to understand the way the world is ran. The world is ran like one big corporation, guys. If it don't make money, then they're going to have to figure out a way for it to make some type of money. That's just the way it is. So if you ever try to make a business and you don't want Uncle Sam to know about your business, do everything you possibly can do to not let them know, because once they find out about your business and it's been under the radar, they're going to come after you. It has to make money. People have to invest in it, so the circle of life can continue to keep flowing. That's just the way it works. But these are the things that moves the market. So you got to be mindful of those things. Be mindful always of interest rates decision, because this is what causes inflation. The Feds is just going to look at these reports of all these managers purchasing and us consumer purchase index. They're going to look at the reports and be like, okay, it's not a lot of people shopping, so we got to shoot the prices of gas. We got to force gas prices to go up because there's not enough people buying items. So we have to make, to accommodate that, we'll offset it. We'll boost the price of everything. So now bread is, instead of bread being $1 and some change, we're going to make bread be $10. You see what I'm saying? Because a lot of people not shopping, so we don't have a lot of people going to work to actually make bread nowadays. So those who are going to work, they're the ones feeling the real labor of what's really going on. So to accommodate the bread shortage, we're just going to sell bread for $5 or $10, because then we'll be able to offset, the other bread that's still lingering out there, that because employees not coming to work, they can't make the bread like they should, right? That's how inflation works. Once again, like I just said, no matter what we do, somebody's making money off of it. That's just how it works. So just be mindful of these things that's going on in the world. Pay attention to news that's out there. Any type of news you hear about, like a president speaking or the Federal Reserve about to have some type of speech, pay attention to those things, because those are things that's going to impact the market. We already know about the NFP report. These are the same things that moves Wall Street. It moves the S&P 500. Earning reports, guys. Earning reports. Always pay attention. This is 500 companies now on the S&P 500. That means these 500 companies going to report, at random days, random times. They're going to report their earnings. So you got to be mindful of that too. These are the things that's going to move the market a lot. Right now, we are in the middle of a lot of wars right now going on. We have the war with Russia and Ukraine. We have the Middle East war still going on, guys, here and there. And then now we have this new world war, possible war with the tensions with China now. So pay attention to these things. These things always going to impact the market also. These news events, you can find this on investing.com. Once again, investing.com is the location where you will be able to find all type of news events that's going on, okay? Next slide. Hours of operations and contracts expirations. So the MSE contracts, they are available Sunday through Friday, 6 p.m. to 5 p.m. Eastern time, 23 hours a day. Okay, that means at 5 o'clock Eastern time, that'll be the time where the contracts is pretty much, the markets are closed for the maintenance hour. All right, contracts are quarterly, which every 3 months they will change to a new contract. So always remember that every 3 months they will change. He said, here are the quarterly ticker symbols codes for the MES, which is the S&P 500, the micro E-mini S&P 500. They say the January contract, guys, is MESH, which we all are currently on this particular contract. All right, after this contract is up, we'll be entering into the next set of contracts, will be the June contracts. So that'll be the It'll be April, May, June. So April, May, June will be MESM. All right. And then for the September contracts will be MESU. And then for the last quarter of the year, which will be the December contracts, it will be MESZ. All right. And I had to do another video for you guys to break that down so you guys could get the understanding of how these work also. So let me just have y'all to watch this quick video and we'll go from there. Gotta copy that. So yeah, let's do this.
The display format of futures contract codes is fundamental to understanding pricing across multiple expirations. Contract display codes are typically 1 to 3 letter codes identifying the product, followed by additional characters indicating month and year of expiration. The format of a contract code varies according to asset class and trading platform. Many contract codes originated on the trading floor to convey maximum information with the fewest characters and migrated intact to the electronic environment. Let's first look at the E-mini S&P 500 futures contract. The CME Globex contract code for this product is ES, which is also the product-specific code used on CME Clearport. Now let's look at the Euro-Dollar futures contract. On CME Globex, this contract is identified by the code GE. On CME Clearport, this product is identified by the code ED. It is very important to be aware the contract codes can vary across venues. For contract expiration, additional characters to the right of the contract code indicate month and year. Each calendar month expiration is identified by a single letter as follows: January, F; February, G; March, H; April, J; May is K; June is M; July is N; August is Q; September, U; October, V; November, X; December, Z. Available contract expiration months may vary by product, but the letter following the contract code always indicates expiration month. Expiration year is indicated following the month as a numeric value. Let's construct the display code for the E-mini S&P 500 futures contract expiring January 2019. The first determining factor is the trading platform. In this example, assume CME Globex. For CME Globex, the E-mini S&P contract code is ES. Following ES, we add the expiration month, which for January is the letter F. Finally, we add a 9 for 2019. Therefore, the display code for the E-mini S&P 500 futures contract expiring in January 2019 is ESF9. These general rules apply to the format of futures contract codes, but it is important to be aware that codes and available expirations can vary across platforms.
All right, guys. So let's move on to that. If anyone have any questions, guys, just always send me an email or a text so we can go more into it. But that's pretty much how we get the codes for the contracts. All right. The 3 trading sessions, because we talk about this all the time. Like what sessions would you trade? Where do you feel that you're more successful when you're trading? Do you like the New York session? Do you like the Asian session? Do you like the London session? So which session do you like? So what I came up with the breakdown of each session. So we already know that there's only 3 trading sessions throughout the whole entire world. Because we stay in North America, we only really concerned about North America. But not only us guys, but the rest of the world is actually more concerned about North America too. This is actually, the real, a real time that, everybody like to get in. This is where the most money in the whole entire world is moving all at one time, actually. New York is pretty much our money, the money system of America. It's the actual World Trade Center, actually. And the World Trade Center is pretty much what it actually, self-explanatory. It's a World Trade Center. So we do world trades at this World Trade Center. So business from an international level, whether it's foods, whether it's commodities, whether it's gas, gas, jewelry, which are commodities. That's pretty much what happens at the World Trade Center. We sit down, we create deals, we make deals with other countries. We try to You already know since America's ran like a corporation, we try to go and take over somebody else's country, take advantage of them, even though and pay them super poor, knowing that they live in poor conditions. We would rather pay them than to pay the Americans to do things Americanized within our own country. American made things like we don't even get things. A lot of things nowadays are made in China, made in other countries. That's because the world trades. That's what they do over there in the world trade in New York at the World Trade Center. Remember 9/11 when they hit the twin towers? Those were the World Trade Centers before they built the new one. So just imagine, even though a lot of people believe it was an inside job, a lot of people believe whatever you want to believe, those buildings was attacked for a reason. If anything happened to America, you have to attack the World Trade Center first. Once you attack that, then the fall of America will start the process of falling. All of America is tied into the World Trade. That's just what it is. At the World Trade Center in New York, everything about America, everything as far as our financial institutions, everything, guys, it's all within the World Trade Center. So just letting you know now. So the money of North America is in New York. So just letting you know. The U.S. session, guys, starts at 9:30 Eastern time to 4:30 p.m. Eastern time. So this is Monday through Friday. So this is the New York session. This is the busiest session in the whole entire world. The second session, which is not as busy, nice smooth session, which this is where I'm more successful at, is the Asian session, because this one's more smoother. It's more simple. It's more basic. It's more, the market's going up. The market's falling. You can just sit back, drink coffee or drink tea. You're good to go. This session is from 7 p.m. to 2 a.m. in the morning, but it's 7 p.m. in the evening, our time, Eastern time, Sunday through Friday. And then the London sessions where things get turned up just a little bit right before the New York session open. This is 3 a.m. in the morning. All right. This starts 3 a.m. in the morning to 12 noon Eastern time. All right. Monday through Fridays. These times are a guide to show you when markets will be its most busiest. After hours won't be as busy. So anything that's after hours, guys, you're good to go. You don't have to worry about it. After hours will pretty much be like right here from 9:30 to 4:30. So anything like 6 o'clock, which will be the after hours. 6 o'clock all the way to 9:30 again, which will be a full after hours. All right. So that's pretty much what I'm saying. When it comes to after hours, it won't be as busy. But when the New York Stock Exchange open at 9:30, it's going to be extremely busy because the New York Stock Exchange is open. All right. So these are the three trading sessions, guys. Let's go to the next slide. Now we're going to talk about the actual broker who we all trade with. So we all trade through IMP. We got to know who IMP is. I want everybody to go on their website whenever you get a chance and really dig deep into the IMP. Find out everything you need to know about them, So IMP Futures is a regulated broker that is seen as a financial institution through the eyes of the United States government. In other words, they are real, legal, and legit. Okay. They offer some of the lowest price futures, micro E-mini contracts nationwide. Okay, you only need $100 just to start trading with them. Okay, your money is protected by the government through the Reserve Bank of America, which is short for BMO. This is in Chicago. Okay, so the Reserve Bank of America is in Chicago. IMP is the middleman connecting both buyer and seller. So I just want everybody to know what IMP. Their job, their goal is they are just a middleman connecting by both buyer and seller. They charge fees that are based off of your daily profits. So whatever you make in that day, guys, within 24 hours, that's the fees they're going to charge. The fees, go on their website and find out, but I'm also going to do more in-depth study on the exactly how much fees they really charge based on how much a person might make. Say if a person might make, they do it daily. It's not a weekly thing. They do it daily. So all your daily profits, when you close out a position, it's going to be calculated up at the end of the day. So during that 5 o'clock hour, when the markets are closed, they're going to calculate all your profits, and then they're going to then put their percentage on how much what they charge. But they do have a certain percentage. It's just I have to really look for it. But they charge a certain percentage. They actually send you a statement every night by 11 o'clock Eastern time or 12 midnight. You will have a statement in your email showing all your good trades or bad trades. You're going to always get a statement for any type of activity that took place with your trading account within that day. You're going to get a statement every day, okay? You do pay your own taxes annually each trading year, guys. So you do pay taxes. I want everybody to understand. AMP look at all its clients as this is your own business. That's how AMP look at us. So anybody who has an AMP account, we're seen as we have our own business through AMP pretty much. So you do have to file taxes. So I want everybody to understand that. AMP is closed on all major holidays. So any holiday, guys, it doesn't matter what holiday it is, they're going to be closed. So what's going to happen is they're going to open at 6 o'clock in the evening time when it's a holiday. They're going to be they're going to close at 12 noon, or like let's say 11:45. But they'll be open like that morning, a little bit like 7 o'clock in the morning to probably like 11:45, and that's it. Then they're closed for the remainder of the day until 6 o'clock that evening. So when they say they're closed on the holidays, that's pretty much their hours. Like you'll be able to trade like in early morning, but about 11:45 before noon, you can't trade no more all the way to 6 o'clock. That little time frame will be the time where they're closed, okay? So just want to give everybody a heads up on that. Okay, maintenance versus day margin. So this is pretty much how much a person is charged and why they have a maintenance also at the same time, like maintenance fees and then day trading fees. Okay, so let's really get into the depths of that. What is maintenance fees? So maintenance margins is set by the exchange. The exchange is what we learned from the beginning is CME. So CME create their maintenance fees, not AMP. So AMP is not responsible for maintenance fees. It said this is the amount required to carry a contract past the daily close. So pretty much the close is 5 o'clock. If you want to stay in a trade past 5 o'clock, you have to meet maintenance margins. Maintenance margins, the money that they're going to hold is going to be returned back to your account after 5 o'clock. So by 6 o'clock, whatever the maintenance margin was or the maintenance fees was for them trades that you were in, they're going to release the money back to you. It's just a hold, guys. It's just security. That's pretty much why they have it set like that. Now CME is only responsible for that, not AMP. Okay. It's a day trading margins is set by AMP Global. So AMP is the one who create the day trading margins, which is this is how much money it is to buy a contract. This is how much you have to have in your account. Like if you want to buy the S&P 500 and it's only going for $40, AMP is the reason for setting the $40 price. Okay. It's a day trade margins is solely the amount required to enter into a position per contract on an intraday basis. Intraday, guys, is anything from 6 o'clock to the next day when the market closes. So from 6 o'clock to the next day the market closes, which will be called the whole intraday trading, which will be the actual day, the day trade that you had to make during that time period. Whatever you made during that time period, or no, whatever you did during that time period, you was subject to only buy the day trading margins. You didn't have to worry about the maintenance fees until 5 o'clock came. But during the intraday, which is 6 p.m. Eastern time to 5 p.m. Eastern time. So pretty much 6. So right now, this evening, it was 6 p.m. from 6 p.m. to tomorrow, 5 o'clock. That will be the intraday hours, all right? Those are the normal times where you have the contracts available for you at those cheap rates, okay? It is not the risk liquidation trigger nor the maximum amount your account can lose. So just letting you know also, the money that your day trading margins is, it's not liquidated, so meaning that if you don't hurry up and get out of the position, it will still be moving still even after hours. Or they're going to have to force you to close your position if you don't meet the maintenance margin fees, all right? So if anyone definitely had questions about this, definitely contact me, send me an email. I'll explain it more, and then also go on AMP Global website so you can read more on the maintenance fees and day trading margins. But this is really the basics. So day trading margins are in effect anytime the market is open, both day and overnight. So it goes back to the intraday. Remember I said from 6 p.m. to 5 p.m. the next day. That will be the full day trading margins, day trading session. Except the last 15 minutes of each trading session. So I said 5 o'clock. They're saying about 4:45, guys. The day trading margins is over with. So it's going to switch over to the maintenance fees, okay? So just letting y'all know now, giving y'all a heads up. This is how it works. Anyone who's trading, doesn't matter if you're doing good or bad, anyone who's trading and is getting to 4:45 at the end of a trading session, which before the maintenance fees kick in at 5 o'clock, anyone who's trading, AMP is going to automatically close all your positions if it doesn't meet maintenance fees or the maintenance margins that you need to carry the trade for during the maintenance session. Okay, so if you're still in a trade, you're on a trade, you bought 2 contracts, you have a $400 account, you bought 2 contracts of the S&P 500, and the maintenance fees is $1,000 per contract. They're going to automatically close your position out because you don't have $2,000 in your account to keep the position going. So I just want y'all to know that, okay? Margins are subject to change at any time without prior notice. They mean when, pretty much in other words, they're pretty much saying that when when something crazy takes place where the market become very volatile, meaning a lot of buyers and a lot of sellers are entering into the market, or a big news event finna come out and they have to offset the margins, then they will boost up the price. And sometimes it happens really fast where you don't even get a notification that the price boosts up. But one thing about AMP, I like AMP always really send you a notification letting them know that, hey, that contract that's worth $40, we have to boost the price up to double that. So it's going to be $80 now for this contract. Only going to be $80 until, the next 5 hours. Once the 5 hours over, we're going to bring it back down to $40. So just giving you a heads up on that. That's how it works. Margins only go up when something serious in the world is about to happen, so serious that a lot of traders are about to enter into a trade because of whatever world event is going to happen. It happens all the time, guys. Even if it's a war. 2-3 years ago, right before we had the pandemic, there was something happened with one of the bases over there, the military. Our soldiers was hit. Some missile hits one of our, area where our U.S. soldiers were at. And the gas prices, I don't know if everybody knew at that time, gas prices shot up like really, really hard because we thought at the time, America was about to enter into a war. So we thought America was about to enter into a war, so we didn't, eventually the gas prices went back down. Just like that, when that happened, guys, the margins, AMP sent the email out to everybody, let everybody know the margins have shot up just because of that. Something happened over there where somebody tried to bomb the Americans' base or something like that in one of those countries. I forgot where it was, but somewhere in the Middle East. And the gas prices shot up just temporarily, just because of that one little moment, that one incident. So that will be what margins will be subject to change. AMP will do something like that, guys. All brokers would. So just be mindful of that too. So world events will impact your margins to change. And it's only temporarily. It's nothing that's long term. All right, account sizes and examples of the MES. So I wanted to definitely make sure I went over this part with everybody when it comes to like how much money you really need to have in your account to just start trading. So what I did was created this right here. A person with an account size of $160. So I just want to let you know how much money you can make with just $160, all right? We already know the MES contracts are going for $40. We know that already, okay? So what I did here is created these scenarios, these illustrations and examples of a person with different account sizes. So this is somebody right now just starting out with $160. So they are able to buy 4 contracts at $40 each, which equals $160, okay? So 4 times 40 equals 160. They say the pip value per contract is $1.25. So we know we can get paid per contract $1.25. So if I do 4 contracts times $1.25, that equals a $5 pip value. So right here, say you will make $5 per pip. So this is how much money you will make now. So you got $160. You buy 4 contracts. You will make this amount of money every time the market moves in your favor. So per pip, per tick, or per point, however you want to say it. And say, let's just assume that the market moves 160 pips in your favor. That's $5 times 160 points or pips or ticks. That equals $800. That's your take profit. That's a person only starting out with $160. These are real numbers. This is not nothing made up. These are real. This is a person with an account size really of just $160. Market moved, guys, all last week, almost every other day. It moved 160 plus points all the time. So that's somebody always just making $800 no matter what. Okay, let's switch over to a person who has a little bit more money to play with. They have an account size of $320. With that, they can buy 8 contracts at $40 each, which is $320. The pip value stays the same, guys. It's always $1.25. That's how much a person can get per contract. And if we buy 8 contracts, guys, and we times that by $1.25, that's $10 a person is making when the market moves in their favor per point. Okay? And I just said this right here. This is how much you will make per point or per pip. And say, once again, what if the market moves 160 pips, right? If the market moves 160 pips, that's $10 times 160, which equals $1,600. Take profit. This is somebody who's only starting out with $320. I just want you to be mindful of these things, guys. These are real numbers. This is how cheap it is to afford this. And the market might move 160 points. If you enter into a good trade, you have a potential to make $1,600, guys. I mean, you can't beat that with a small account like this. This is very small in the trading world. Trust me. The real professional's not playing with $300. They playing with $300,000. They playing with $100,000 over here. So I'm just being honest with everybody. This is why we're on AMP. AMP makes things cost efficient for us to be able to afford. So now we all can be a part of this trading world for pretty much dirt cheap. $160, $320. Yeah, count me in. I'm signing up for this. So that's just these just 2 scenarios. Let's move on to a different count size. Let's say now you got almost $500. You got $480, right? So let's just say right here's another scenario. A person with $480, they can buy 12 contracts now. $40 each. Everything still remain the same as far as the cost of the contract, which will equal $480. They say the pip value is still the same at $1.25. We know this is how much the value of the contract. It's a 12 contracts, guys, times $1.25 equals $15. Say you will make $15 per point. They say the market moves, once again, 160 pips in your favor. That's 15 times 160, which equals $2,400. I can't make this up, guys. These are real numbers. This is a person who only starting with a little bit of under $500, and they're able to make, when the market moves in their favor, they're able to make $2,400. This is very convincing, guys. I'm being convinced just talking about this. Like, I can't wait till I put $480 into another account and keep trading. This is convincing. $2,400, guys. You make that a week or in a day. I'm sorry, that's enough right there to really take care of some serious things in our lives when it comes to these bills. Now let's just move on to somebody who had a little bit more than 480. Let's just say 640. You got 640. Once again, guys, these are small account sizes, so it's not a lot of money you actually really need. That's why I wanted to make sure I put a special video together just for this. so we can really break down what you're really getting based on the size account you have. Okay, so these are real examples of real live numbers. So a person with 640, guys, they can buy 16 contracts with just $640. They can get it for $40 each, which will equal 640. Okay, the pip value is still the same at $1.25. 16 contracts times $1.25 equals $20. That means a person would now get paid $20 per pip. If the market moves 160 points, that's $20 times 160 is $3,200. This real time, guys. This might happen in one day, so I just want everybody to be mindful that the MES can move 160 points easy per day. Per day, guys. So that's Monday through Friday. But if you only want one of those days, this is what a person will make if you have an account size of $640. You'll make $3,020 just like that in one day. So just giving you a heads up on these scenarios. And I got another one here. Let's just play with the $800 account now. Now we're taking the account up a little bit higher. This is for those that got a little money in their pockets and they can afford to put this much money in their trading account. If a person has $800, they can buy 20 contracts. This is real numbers. These are not fake. Each contract we already know is worth $40. That's 20 contracts at $40 equals $800. The pip value per contract remain the same at $1.25. 20 contracts times 125 equals $25. That means a person would get paid $25 per pip. If the market moves 160 pips, that's $25 times 160 points, which equals $4,000. That's a person with an account size of just $800. They have the potential to make $4,000. Let me just make sure how much time I got on this video. 1 second, guys. Okay, we got 10 minutes, all right? Let's hurry up and get back to this. All right, so that's the $800 account. All right, once again, this is cheap compared to how much money people are really trading nowadays. But this is why we're on AMP, because we want everybody to be a part of trading. I don't want nobody to feel left out. Or I can't trade because I don't have $500. You don't have to worry about that. They say the account size here now, we're going to take it up a notch. We're going to take it up to $960. So this is somebody who's playing with almost $1,000 in their account. They can buy 24 contracts at $40 each, which equals $960. The pip value per contract is always going to be $1.25. We already know. 24 contracts, guys, times $1.25 equals $30. All right. That equals $30. You will make $30 per point. If the market moves 160 pips, that's 30 times 160, which equals $4,800. That's how much a person can make if they have almost $1,000 in their account. Anybody who's make $4,800 in one day or $4,000, give me a call, send me $1,000. I really appreciate that. Thank you. Amen. So that's that. There you have it, guys. This is small accounts. I'm not even gonna go up to another illustration like $1,000 or $2,000 in your account. I don't think that's important. I think this right here is enough to show us that you don't need a lot of money to make. You don't need a lot of money to make a lot of money. You just need a little money and just with the right knowledge, make the right trade. And this is what you might see this over time, guys. $4,000, $4,800, $800. You already know. So what I want to do is I want to do a comparison, guys. I want y'all to see Wall Street. So let me go to it now. 1 second. I want you guys to see Wall Street. Hold on. I did delete it. Let's see if it didn't delete. I'm just making sure. I'm sorry, guys. Yeah, it was deleted. So But I just wanted to show y'all a comparison of Wall Street. Let me see if I can go to the chart. So we're on the chart now. Oh, beautiful $200. I love it. That's the SMES we've been talking about all day on the weekly chart, guys. It's sitting right there. Here it goes. That's the 16 contracts I was telling everybody about. If we go back to right here, what it said about the 16 contracts, that's just how much a person can make if the market moves in their favor. Right here. That's $640 a person account size right there, guys. If it moves 160 pips in my favor, that's $3K right there, easy. All right. But once again, realistically, we got to make the right trade. So right here, I took advantage of a weekly chart, the moving average line sitting right here. That's what I did. I took advantage of that, and I made a buy order here. So it has the potential. It already spent over 240 pips in one day falling already. So it has the potential to go up another 240 pips. Remember, my take profit is it's not even at 106. It's like at 140 for a $3,000 take profit. That's called smart trading, right? So you trade like this all the time in order for you to even make that type of capital. But once again, that's $640 to make this type of trade, okay? Wall Street, guys, I'm going to go back to this right here. Wall Street is, let's just go to this scenario. Let's go back to the first scenario. I'm going to show you what Wall Street is. So let's see, right here. Wall Street, guys, I have to buy 10 contracts of Wall Street to equal the same price as this right here for $5. So it costs $500, guys, to trade Wall Street for $5. I have to have $500 in my account. So right here where it says account size, it's only $160 I need to trade the S&P 500. But with Wall Street, I need $500 to get it for the same price as the S&P 500. You see the difference? That's like a $300-some difference. What? $340? That's like a $340 difference right here. You see what I'm saying? That I don't have to worry about. That's why I told everybody to switch over to the S&P 500 to make their trades, because it's cheaper this way. Okay, so that's why I want everybody focused on the S&P 500, because it's more like I said, cost efficient. It's more cheaper and affordable for all of us to be able to trade. So whether you have 160 or 320, it doesn't matter. All of us now have an opportunity to actually trade. I know every last one of us at least got $160. This is a family meal nowadays at some of these restaurants, and like a family of four. You're going to spend more than this, even more than this sometimes. But y'all already know. But $160, guys, we got Apple Watches that cost $500, $600, and people buying them. I can't even afford the Apple Watch. I can't afford nothing. You know what I mean? So I'm not even finna say and make it seem like, I don't have at least $60. I'd rather take that $160 and make a wise investment and make $800 today. That 160 would then grow to another $800. I then can have a capital switch over to the $300, or I can take my account to the next level to the $480 marks or the $640 marks, and then I can just keep trading that way, compounding the account. But this is pretty much it for the night, guys. I wanted to really break down these examples of the account sizes, times that's best for you to trade. Pick and choose what times. But once again, we all going to work together as a family to make the wisest trades possible. I do hope that everybody do get the opportunity to make this type of trade right here and just hold the trade if you get an opportunity. Whether it's live or on the demo, guys, it's all about practice. So if you're not sure about going live yet, practice on the demo, making trades on all the different time frames. This is a weekly. Let's go to a daily chart. We got a new candle that opened above a moving average line. So this looks promising. If we still buy right now, guys, we need to get out before the market gets up there to the next Bollinger Band. This is the daily chart. Let's go to a 4-hour chart. Time is almost up. Same thing on the daily chart. 4 hours, I'm sorry. Same thing on the 4 hours chart. This is our Bollinger Band line. We had that last candle. It closed underneath, but now we have a new candle and it's trying to break past it. On the next 4-hour candle, we need a candle just open above this current candle. If it opened above this current candle, guys, we going up to the upside. But we need to get out the trade because we don't know if the market might pull back down if it hit this Bollinger Band at the top, which is at 40.37. So we need this to be the take profit. We buy as soon as we get a confirmation candle that's going up. That's all we need. And you just make your trades like that. Doesn't matter how much money you have in your account. We just need to see confirmation before we make a trade. That's all we can do. All right. I do hope everybody continue to have a great weekend. I love everybody, and God bless everybody. Continue to go hard trading, guys. And amen. Yes, ma'am. You got a question?
I do not. I was trying to do the clap.
Okay. All right, no problem. No problem.
Thank you, Will.
No problem, guys. You guys have a good night, man. I do appreciate y'all.
All right.